and welcome to Globally's Brexit Guide for UK retailers. My name is Neil Cushel. I'm the CEO for Globally in Europe. For those of you that don't know much about Globally, we are Europe's leading cross-border technology company, and we work with over 500 retailers to localise the experience of cross-border sales and smooth that journey internationally. Now, we operate sales for over 300 brands into Europe, and so because of what's been going on with Brexit recently, we've had to get fully prepared to manage that on behalf of those brands. And we get a lot of questions at the moment about what does Brexit mean? How does it work? How best to manage it? And so I thought I'd create this quick video for you so that you get some understanding of what the challenges are and what our advice is for how to overcome them. So let's start by what has actually changed since the 1st of January. Well, in a nutshell, on the 31st of December, the UK left the EU Single Market and Customs Union. It was heralded that we have a trade and cooperation agreement, which clearly we do. However, there was a lot of confusion, or certainly initial thoughts, that it was going to be a very smooth transition. And actually, some of the difficulties around managing the paperwork and the VAT and the tax and duty into Europe have actually been quite complex. Having said that, on a positive note, if they're managed appropriately, actually we are seeing that brands are still selling very well into Europe post-Brexit. And I'm going to talk to you a little bit about how that is happening. You guys will have seen there's been a lot of stuff in the press about the changes to the shopping experience for online consumers. Consumers both in the UK and the EU getting unexpected bills at the point of delivery from carriers that they weren't expecting, that's causing high levels of returns, dissatisfied consumers, affecting the ability for a consumer to come back to a brand to buy again. So let's look at what has actually changed. Well, there are three things. The first is VAT management. The VAT hasn't actually changed, but how it is collected and charged is different. Customs duty. Customs duty will apply on any orders over €150 into the European Union where the country of origin is not UK, and we'll cover that a bit more later on. And then finally, customs clearance. At the point of clearance into EU, the VAT and duties are being managed, and there are some implications on those. So those are the three things that we need to think about. So let's have a look at the implications on cross-border trading of each of those, and we'll start with VAT. So the new EU VAT rules replace the old distance selling regime. You used to, as a UK brand, if you were over the threshold for VAT in a country, you would charge the VAT at checkout and remit it straight to the French or German authorities. If you were under the threshold for the distance selling into that country, you would just pay VAT to HMRC as usual. Now that has disappeared. The UK is now no longer part of the EU. However, VAT still applies when you're shipping into France or Germany, for example. So on any order over €22, the EU VAT rate for that country is applicable. And those rates vary between 17 and 27, although the most common is about 20%. And they are paid at the point of import by the courier or carrier who is clearing it into the country. And at that point, the carrier will then look to recharge it to either you or to the consumer. And we'll talk about that soon. The second is customs duty. Now, this is where it is a grey area, and this is the bit that caught many brands by surprise. The free trade deal means that if your item has a UK country of origin, there are no tariffs. However, many, and potentially even the majority of things that are sold from the UK on through e-commerce into EU are not UK origin. And if they're not UK origin, then orders over €150 are subject to customs duty according to the HS product code of the items in the basket. And that country of origin needs to be included on the commercial invoice. Now, there are lots of discussions and debates about whether your goods can be classified as UK country of origin. And for clarity, even if they're EU country of origins, duty and tax will still apply. So what I would recommend is that it's important for you as a brand to understand whether or not you can classify your goods as UK country of origin. And there are many industry bodies that will help you, like the DIT, the UK Fashion and Textile Body. Your accountants can probably help you as well. But it's important to get that right information so that you know whether duties will apply to your products or not. Then we get to customs clearance. All shipments into the EU now need formal customs clearance. The decision that you need to make as a brand is whether you're going to send it as delivery duty paid, DDP, or delivery duty unpaid, DDU, sometimes called DAP. Now, many carriers and the Postal Service, in fact, do not support DDP into Europe. And so that's a consideration. And delays due to shipping delays, customs and excise checks are there. So you need to think about your carrier, what kind of performance they're doing at the moment, and how you communicate that to your consumer. Now, unfortunately, customs clearance and Brexit fees will apply to all orders. So at the point at which the items are being cleared, your carrier will have a charge for customs clearance, and they will probably have a charge for Brexit, which is just a general increase to their costs into the EU. And the fees apply to all orders. As a caveat though, orders to Northern Ireland from mainland UK do not incur duties or a CCF. And then to think about returns. Goods returned to the UK by customers in the EU, firstly, they could be subject to import duties and VAT if you are not registered for returns goods relief and you don't match clearly the inbound way bill with the outbound way bill. So need to be aware of that. And actually, whilst we're on the subject of returns, it is also currently not possible to reclaim the VAT and duty that's been paid on the way into the EU, and so you need to take account for that in your P&L as well. So what's best practice? How to maintain conversion and sales? So what's important is that you maintain a seamless experience for your EU customers. Take these problems and internalize them into your company. Handle them on behalf of your customer so that they get an easy experience. So provide your customers with a guaranteed landed cost. The best way to do this is to include the tax, the VAT, duties and fees as part of the product price. So at the point at which the customer is browsing, that price is already their fully guaranteed landed cost, and they don't have to worry about it at the other end. If that's not possible because of your business model, and for some brands, either they've got a fixed RRP and they can't absorb that margin, or they're selling items that it's very, very important that they're competing with other retailers selling the same thing and they need a very low product price, then clearly show at checkout what the duties and taxes are and give the customer the ability to prepay. It's most important that your customer doesn't get stuck with those charges at the point of delivery. So when you're going to do that, then make it very clear throughout the user journey that the costs are fully included in the product price, or make it clear that duties and taxes will be calculated at checkout so that they can see. It's really important for the consumer that they've got immediate confidence, particularly if they're a first-time customer and you're trying to acquire their business for the first time. Make it really clear to them throughout the journey exactly what experience they're going to get. Okay, let's have a look at future changes, because there are some changes coming in July that we're going to move on the 1st of July to a position where the €22 VAT threshold will be abolished and VAT will apply to everything. As a retailer, you will be required to report VAT in your own name and potentially remit it back to the European authorities. So for orders below €150, for those baskets, VAT will need to be charged at the point of sale by the brand and then remitted back to the EU authorities. However, if the orders are over €150, then that system won't work, and both the VAT and duty will continue to be charged at the point of clearance as they are today by the carrier, and then charged back to either you as the retailer or to the consumer at the point of delivery. So globally, how do we manage it? Well, the benefit of globally is that the fiscal setup between globally and a retailer is that we will actually become the merchant of record on export for you in the UK. So the fiscal transaction between you and us is a domestic UK one. We will then pass that flash title onto your consumer in the country. They will become the importer of record, and that means all of that cross-border stuff becomes our headache rather than yours. When it comes to pricing, we'll work with you to be able to either include the pricing into the product so that you can absorb all those costs with a guaranteed landed cost and to make sure that's all very clear, or we'll be able to push it onto the customer through the checkout. Duties and country of origin. We will make sure that you're applying the COO information correctly. We'll make sure it's uploaded into the commercial invoice, and we'll make sure then that duty is only applied to the correct items. When you're doing the messaging, we've got some marketing banners throughout the site, which will then allow you to easily and clearly see and tell your customers that they're not going to see any additional costs upon delivery, or if they are, make it very clear they will see that at checkout. When it comes to shipping, we're integrated with many leading shipping providers, and that's meant, particularly in this post-Brexit world, we're able to chop and change between carriers to make sure that we've got the best DDP carriers into the EU at the best prices. And then finally, when we're returning goods to the UK, we'll make sure that returns goods relief is applied and there'll be no import duties and VAT if that product returns. So that's a brief overview. I do realise it's quite quick. If you do have questions, then send them to info@global-e.com or speak to any of our team and we'll be happy to give you some more advice. Thank you very much.